Stand by. There you go. All right. What's going on, everybody? Sorry we're a little couple minutes late. Welcome to another episode of Good Morning NASDAQ here this morning. As you can see, I'm replacing the one and only amazing host, Dom. He can't make it this morning. He is doing some important things outside of trading, and so I've stepped in to be his host today, but I am joined by Huddy. How are we doing, Huddy? How are we feeling?
We're good. We're feeling great. Got a cup of coffee. Excited for Tuesday, April 16th, 2024.
God, is it the middle of April already? Wow. Okay.
That's all I got.
We're just flying by.
Yeah.
But all right, without further ado, we're a little bit
As
late.
Dom would say, the sun is shining. It is April the 16th. If you guys haven't done it already, hit the like button. It takes about 2 seconds for you to put your mouse over that thumbs up button and just give it a good old click. And while you're at it, hit subscribe if you don't mind doing that as well. If you guys all want the brand new content that we just filmed over the weekend, I don't know if you guys saw the TikTok that we put out last night or the Instagram reel, but all that is good humor, good entertainment, good information that's coming your way. Hit the like button, hit the subscribe button. And now, Kyle, take away with the gappers.
Beautiful. Yeah, we did film a ton of content over the weekend. We were exhausted by the time it was over, but it was worth it because we had a lot of good stuff. So, yeah, anyway, without further ado, since we are late, let's jump right into the gappers. First one is PALI, a little poly here. History of, we've had two gaps.
Along came Pally.
Yeah, we've had two gap ups last year since September. So one actually ran a little bit, the other one did not. So we're at 50-50 here. We keep going back even further. We have a few right here, right? Or at least some running. So not a good history. Again, most of these gappers we find are going to be, the top left to bottom right kind of chart. This day isn't any different, I don't believe. Let's see, what kind of news do they have? They have something about their biopharmaceuticals. Let's look. Demonstrates bioactivation of poly 2108 in ex vivo study of normal, healthy, and unserative colitis patient's stool.
Ulcerated.
All right, so we're talking about stools. Lovely. In Carlsbad, California, not too far from me. Maybe I can go see their office, see if they're full of crap or not. Let's look at dilution. I'm imagining there's going to be some, given the fact that it's gap and crapped quite a lot. Let's see here.
I'm going to imagine that it's a small amount, though,
Okay.
if there is.
Yeah, historically high, offering building low, need cash and medium though. In January, they had 1.4 million warrants exercised already. 12 months of cash. Offering was priced in June 22. Yeah, so not much, like you said, Huddy. You got the nail on the coffin there. Well, okay. I mean, I don't have any other thoughts other than history kind of speaks for itself. This one, it's kind of been I guess if I had to have a crystal ball, it's gonna have some kind of spike because it always has some kind of spike. But then it is likely going to not hold its gains. Whether it holds its gains in a green candle or it really doesn't hold its gains and it ends up going below the open and below the low a day and then closing at its lows, is to be foreseen here. But if I had to crystal ball it, that's kind of what we're dealing with. Any other thoughts, Huddy?
Yeah, some fresh warrants from January 2024 priced at 1097. Maybe that's what they're going for. It doesn't look like the last time it gapped up they were able to execute these for whatever reason, but they are still there on dilution trackers. So maybe that's the agenda here with the gap up. Just some things to note about it. Yeah, they're the reason I said that the dilution would be small is because their float is small. So just as you go into today, it's good to know that the float here is less than 1 mil. It is relatively easy to borrow. I mean, it costs some money, but it's pretty cheap. And there's warrants overhead. And so we'll see. It's either a pump and dump or it's either just gaps up and it dumps or they're trying to go for those warrants and it gets a little tricky out of the open for any short sellers.
All right. I have to agree. All right, if we move on to the next gapper, we have DYNT. All right.
DYNT.
70 cents. Let's look what pre-market looks like. Ignore these wicks and to the upside and downside. Those are just kind of misprints as the market's starting to get more open and bring in more volume, and market makers are starting to trade. Looks like, okay, the news came out in after hours. Let's just see what it is before we even look at the daily chart. I'm kind of interested. A lot of, I don't have news on my end. Not since April, like April 3rd, which is definitely probably not the reason it's up. Could be no news. Let's find out. Let's go to Yahoo Finance. Yahoo Finance, DY. Sounds like dynamite. Is that the name? Oh, yeah. Dynatronics.
Dynatronics.
Wow, interesting name. Corporation.
Who came up with that one?
Right. 2 months ago, they had earnings. 5 months ago, earnings. So maybe no news. But usually if I don't see a PR, that means it's like there's either like rumors on Twitter or there's social media chatter or someone tweeted about it. So I don't want to say no news because there could be something. It's just nothing official. If you go back even further, once again, another chart of, bottom left to top, top left to bottom right. Quite a little areas where they actually run. Like here, there was a good run. No real big gaps though. It's always been runners. If we keep going more, a little bit of a gap here. Oh, big gap here actually. This one went from 6 to 28 and then closed at 9. That's quite the dump. Interesting. Okay. So again, I think you understand for the viewers why me and Huddy usually say the same things over and over again, because it's kind of why we trade penny stocks in general, because it's kind of rinse repeat the same idea or the same framework of what to expect, and given the odds of what we expect usually play out gives us a positive win rate, and then we just rinse repeat. So for me, again, like I said, I almost have the same thoughts as Polly. Does have a history of running, but then again, no run has ever really lasted long besides that one way back here that actually went to like 40, and I imagine they probably reverse split. I don't think this maybe was ever at 40. And so I'd give the same thing of like, maybe this runs, but we've seen a lot of sub 1 cent gappers this year really just have no juice whatsoever. Maybe in the chat if you guys remember it all, or even remember any. Was there even, or Huddy asking you, has there even been a runner this year that's gapped under $1? Like say it's gapped from 50 cents to 80 cents or 70 cents. Have we even gotten a runner that's really gone over 1 and then held over 1 this year? I feel like we haven't. I feel like they've been pretty
not this year.
Yeah, unsuccessful in really getting momentum going. So not saying it can't have spikes and can't keep going up for a little bit, but just the odds of the longer you stay in these things long, the better chance you give yourself to give gains back, so that's my only disclaimer or cautionary thing when dealing with especially sub 1, because sub 1 have just not been strong at all this year in my opinion. So
yeah, and there's a reason that these stocks are sub 1. This stock has literally negative. I mean, from dilution tracker, it looks like 0 cash on hand. They are going broke. They have an ability to tap an ATM, so maybe they're using this gap up to get into that to stave off the inevitable, which seems like this small little medical device company is not going to change the world. That's my opinion. It's not financial advice. Maybe they do. I don't know. Probably not. It's probably going to be kind of what Kyle said, which is, flirts with this area for a little bit and then fails horrendously.
Right.
But a nice little gapper there too.
Yeah. Well, yeah, what, 93%? Yeah, that's sick. We'll take it.
We'll take it.
Was there another one? Is there? There's one that's 54. Might as well take a look. Yeah.
WISA.
Yeah, WISA. WISA.
We should reverse split here, probably.
All right, let's look.
Maybe not.
I would say so, just because not even a year ago it said it was at $50 a share. I doubt it. But again, third time's a charm, guys. Bottom or top left, bottom right. Unfortunately, they just fade. They're the exact opposite of what we would want in our equity curves as traders. It's almost like, at least from me and Huddy, we are the inverse because we trade the inverse in their daily charts, right? If they go top left, bottom right, our charts go bottom left, top right. But again, same idea. I mean, gap and craps. This one actually had a really sick run. I mean, percentage wise, going from 74,000, never did that, to 100. It's almost like a 50% run and then pull back, 60% run. But same idea. I mean, no run has really gotten going. It's been one day max and then dying. And so here we are again. Although I will say it is a lower gap up at 50 something percent. Usually it's the ones that are, 80, 90, 100, 150 plus that can are more likely. But then again, these were small gap ups back in, what is this, February and March that weren't big gap ups at all, and they crapped themselves. So I would not rule it out just because it's, not as big of a gap that it wouldn't offer as much of a crap. Let's check out the news real quick. See if there's anything good.
They have a licensing deal with a multi-billion-dollar revenue company.
Okay, that's positive.
It's nice. They got the B word in there.
Yeah, at the $1 billion. Okay. Well, hopefully. I mean, gosh, I hope everything doesn't crap today. We're being a little Debbie Downer today, but if there's anything one to go, I mean, hopefully this is it, given it has actually good news. However, it might not. Let's just check the dilution. That could stop it in its tracks.
They just did a 1 for 150 reverse split.
And those for who do know, but for those who don't, that's kind of been the trend we've seen this year. Of dilutive companies that can't really get loans because interest rates are super high or don't want to get loans. And so the only other way for them to get money is ergo, dilution. And when you dilute yourself too much, you go below 1, you become compliant with the NASDAQ, you do a reverse split. And so because WISA just did a reverse split, and then seeing dilution tracker of how much dilution there is, historically overhead, need cash and offering ability, this seems like just another rinse repeat that this company might just offer sooner than we think, which is unfortunate because I thought this news, maybe this news is good to get it to run for a day or two, but I think long term the objective here is clear, especially being the fact that it just straight down, unfortunately. I don't have any other thoughts.
As far as the dilution goes, we have some warrants from February 2024 with that alternate cashless price protection. I haven't necessarily read into these February 2024 warrants, but just, whenever I see that, it means that they're getting shares from zero. So it's almost like at any price they're profitable, and they could potentially dump onto any kind of liquidity that they want. Does that mean that they have to dump it today? No, but this is a dilutive company. They have enough to double their float or shares outstanding, and that stuff is in the money. And then there's a lot of stuff that's out of the money. But it looks like 1 for 150 reverse split coming from the gutter. It's probably not a great company, but maybe the billionaire tagline gets it some steam. Or maybe they're literally putting out the $1 billion tagline just to dump stock. Most of the times in penny stocks, it's the latter, unfortunately. They're trying to trick you into buying their stock, reading the PR, getting all hot and heavy over the headline, and then, all of a sudden you're like, why isn't it going up? They have a deal with a multi-billion-dollar revenue company.
Right. I agree. Well, alrighty. We speed through the gappers. We've got some time on our hands. However, I'm gonna put my Dom pants on. We've got a good amount of viewers, but only 34 likes. I say if we get to, give them a number, Huddy. If we get over this number, we'll answer some questions.
50 at least.
All right, 50 at least.
Yeah.
Let's do it.
And at 60, I would text Dom and I would tell him that we had 60. But at 50, I'd like be embarrassed.
At 60, we'd let Dom know we're doing good.
Yeah. That the people were showing their appreciation for the channel, even without Dom here. The people were still happy. One of those texts.
All right, let me see here. There we go, 50. Amazing, guys. You guys are awesome. We're at 55. Sweet.
Push it to 60.
60. We're gonna
5 more of you. Call your friends. Call your grandmas. Call Dom. Tell Dom to get on and like it.
Tell Dom to like it. Anyways, all right. Let's do questions here. SB ESPN asks, "What's your opinion on IZM for a first red day?" So, IZM.
Oh, wow.
I honestly. So here's the thing with this. This is not a natural runner. I know it looks like it. I know it. Has almost 10 green days in a row. It looks amazing for a first red day short, right? On first face value. But when you dive under the hood, could it offer a first red day? Yes. Do you need to know what you're shorting before you do so? Also, yes. This is not, again, a natural runner. This is a kind of China walk up scammy pumping up. All this volume for the most part is wash selling. It's been consistent for months now at 400K, and when they really wanted to get the pump going and start increasing some range, they started kind of wash selling and doing it themselves. If you look at the intraday, you can tell it's wash selling, at least majority wash selling, by the fact that most of the volume comes in at very small spurts, right? We've got 3 or 4 minutes here, 5 minutes here, looks like 6 or 7 minutes here, another 5 minutes here. It comes in massive spurts. It is not natural throughout the day. It is certainly not all out the open. It is in very specific times when AKA promoters or manipulators are just wanting to wash sale back and forth to each other. So don't get me wrong, I agree on the daily chart. Like, could this technically, if this was a natural mover, sure, it 100% should be due for a pullback, but because this isn't in any way, shape, or form, the promoters or whoever is controlling this thing can do whatever they want with it. So yes, can it have a red day and be down, 30, 40, 50, 60% if they decide to dump it that time? Sure. But understand, if they're doing that, it's because the promoters will want it to happen. It's not naturally happening because the first red day is technically playing out, if that makes sense. And I say that because a perfect example of this was the last time I was asked this question about a China pump. I think it was NCL. And someone asked me about this NCL, into this run up, and I knew it was a China pump. I'm like, honestly, guys, I'm not looking for a first red day here because it doesn't mean that promoters have to dump it. Turns out on the first red day that technically looks that way, they decided to crush it, 80% off its highs kind of thing. So it could happen, but just know there's plenty of times where these, should have a red day, quote unquote, and they don't because the promoters just aren't ready to dump it yet. So just keep that in mind when you do trade this thing, because it is an extra layer of risk that I don't think people realize when they just look at this chart. So anyways, moving on. Can you guys analyze JAGX after you see this message?
JAGX?
JAGX. We have some history with this ticker.
Looks like a breakout.
Yeah. Talk to us, Huddy. What do you see?
I pull up the chart. It looks like a breakout. Yeah. I'm not the biggest breakout buyer. This is probably a better question for Dom. But immediately when I pull up the chart, looks like you have your key level here from, obviously, I'm sure you're drawing the horizontal line at 1628 would be the highs from March 4th. That would, to me, be the breakout level. And in terms of overhead resistance, at least like on volume, I don't see, the next level of resistance is up there at 53. So maybe some room to run in between 1628 and 53. The next thing I would do is I would check the situation on dilution tracker. Overhead supply low, that's good. I don't want to be buying something that has overhead, basically resistance. Not too much dilution, but there is an ATM with 34 million.
Ooh.
So, probably if I am going to buy this, I want there to be a lot of volume to show me that the ATM is not being just sold into. So it has to kind of prove a level to me, so to speak. But other than that, yeah, I mean, the chart itself, if I'm a breakout buyer, I'm having alerts, around that 15, 16 area, and I'm watching it.
All right. Fortunately, there's an ATM because that kind of kills any conviction I would have on it, but doesn't mean it can't break out.
Yeah.
But yeah, this has been a runner for quite some time. I remember trading this back here. I think I remember trading even before then. This is just always
definitely a former runner.
Yeah, it's always just been around as a play, but again, same old story. Top left, bottom right. Another one that has done plenty of reverse splits, so keep that in mind. But yeah, it doesn't mean it can't break out. And actually, it does look a good chart. Maybe it's just tied it all to. This looks like a lot. This looks a lot like SPCB, right? Another little breakout yesterday. HUBC breakout yesterday as well. It just kind of has the same look. Doesn't mean they have to be correlated, but it immediately popped up for me because they give the same kind of breakout was set, a couple weeks, maybe a couple days ago, and now we're approaching that breakout level. So very interesting. Let's move on here. We'll do the last couple questions. Any shorts on rent, guys, yesterday? Unfortunately, no. Rent was on my watch list, but the borrow situation was a little bit higher than I wanted. Maybe I was just being a little picky because for a $20 stock, they were pretty cheap to the range it offered and to the price of the stock. But I'm used to paying something in the pennies, and this was 5, or this was like 8, 9, 10 cents, and Should I have borrowed it? Sure, because it did work out beautifully, but I just didn't. I had too much going on, too much watching to watch yesterday that I just kind of kept it in the back burner and then didn't short it. I don't think did you trade it, Huddy, or no?
No, it was on watch for me too. I just didn't want to. I mean, I kind of was traveling, but I didn't want to slap it out of market open. I was like, okay, if it fails and proves that it's going to be weak, instead of every day it kind of had this like just morning parabolic strength. So I wanted to see it fail first and change its behavior, and then go after some kind of bounce. And by the time it failed, like it really failed, and the bounce didn't really offer really that good of risk reward for me to get in versus any level that I liked to play off of. And so it faded without me, because at the end of the day, like I don't know how I would have made more, like getting in late. I don't know how I still would have made like 1 to 3, 1 to 4 risk reward. I think it's near impossible risking a level that I liked. So I don't. I think if one was aggressive at market open, you probably found good risk reward, and that's a great play. But I'm usually not the guy that just smacking market open. I usually want some kind of price action, especially when a chart kind of looks like this. But it's a good one.
Right.
It's a good one overall.
Yeah, it was a good fader. Pulled back much quicker than I expected, and made me want to short it. But again, just given the circumstances, like we mentioned, it just wasn't something we were a part of, unfortunately. But it happens. Anyways, let's do. We got 2 more questions here. Saw a Matt Monaco interview, and he mentioned you guys, I think, teaching crypto. We don't necessarily teach crypto in Clover, but we talk about it here and there. I was curious, when buying mostly uplisted or unlisted top tier gainer altcoins, how do you make sure a contract is safe? Great question, because there's a lot of sketchy altcoins out there, being that there's thousands that exist. Frankly, I don't do a lot of due diligence. If I really wanted to, I would know how, which is make sure they have a website, make sure you understand the business, right? Make sure you read their white paper. Like, you could read their white paper and pretty get a lot of information of whether they're legit or not. Other than that, I mean, there's look at how much information you can find on the company. All right, it's no different than penny stocks or small cap. Like if you look up Apple, you'll find thousands of things about Apple immediately. If you look up, I don't know, what's the most scammiest ticker on the block? If you look up, I don't know, what did we just have? We looked up JAGX, right?
Yeah.
I guess it's legit, but it's just a terrible company, and it's getting nothing but bleeding. It's like that. Like, just just try to dive deep as much as you possibly can, and even beyond that, even if you can't get a lot of information. For me, like when I buy altcoins, like 99% of the altcoins I ever buy are with incredibly small risk. Meaning, like I put in like for example, I'll put in over 6 figures into Bitcoin because I know that one's like the legitest of them all. But I will barely put $1,000 into an altcoin. For that reason of like, sometimes I just don't want to do the due diligence, but I think it technically, or momentum speaking, it can go up. And so I'll put $1,000. So if it goes zero, like I only put as much as I'm willing to lose if it's at zero, right? That's just my own philosophy on it. And so that's personally what I do until there's a much more legitimate way to once the SEC of crypto is created, so that you can actually start diving in deep and having some conviction on things or understanding. I just keep it small because I could go deeper and dive deeper on all these, but again, there's tens of thousands of them. I would lose my mind doing that. So if I do like one, I just kind of put in a money I'm about to lose if it goes zero, and then I'm done. So your analysis of MNDR for a possible first red day. MNDR, also, guys, same thing as IZM. Looks good. Looks like a reverse red day. Volume is definitely better than IZM, but in the same realm of it is actually a recent IPO scam tied to underwriters and manipulators that are related to all the ones we brought up earlier. So yes, sure, could it have a reverse red day? Totally. Would it have it naturally because it should? I would say no. It would happen because the promoters are selling and dumping? Yes. So just keep that in mind when you're trading something like this. And even then, it's only 5 to 18. It's a pretty good percent move. But
and I think what Kyle's saying is really important. Like, just compartmentalize exactly what you're trading, so that whether you win or you lose, the outstanding factors that created that win or loss for you. If you are going to trade something like that, right? There's a difference when a stock runs up on like pure retail hype, and there's a difference when promoters are walking it up. And the results speak for themselves. They're going to be different. And the way that you are going to probably strategize around the two, maybe should or should not be different, right? So not all first red days are just like, oh, play it like every single first red day. Like truly know what it is that you're trading, and then try to, avoid the dangerous stuff or identify what dangerous stuff is so that you just know what to expect.
Right, exactly. It's important to compartmentalize, like Huddy said, because like again, a beginner would short this, make money on the first red day, and be like, oh my gosh, I made money. Like I'm getting good at first red days. When the reality is the mechanics behind why it had a first red day are completely different than the natural first red day that occurs versus why it actually did, because it was dumping like a pump and dump. Right. So just knowing that, understanding that, I think is important. But anyways, guys, thanks for tuning in. Some good questions today. Some easy, straightforward gappers as well. All the same trend as we were talking about earlier. But anyways, have a great rest of your day. As always, you got a $7 7-day trial. So if you want to get in there, test out the chat room, see what 4-leaf's all about, or even 3-leaf, if it's more your style. More than welcome to come in and join. We have a webinar today with Dom and Huddy, and then a webinar with me on Thursday. So 4-leaf lovers, we'll see you there today and on Thursday. And without further ado, everyone have a good day, and we'll catch you guys next time. Peace out.